This is a Brooklyn-bound 2 train. The next stop is Wall Street.
Stand clear of the closing doors, please.
Welcome back, everyone. This is Not Your Advisor with NYU Grad on Thursday, May 23rd. If you are already on your Memorial Day weekend, I want to wish you a happy Memorial Day. Hope you and your family have a wonderful time. But the markets are open, unfortunately, for the rest of us. So let's go through the numbers here. So I'm recording this on Thursday at 3:15 p.m. New York. So this is prior to the close. Things may change, but what a day. I'm going to start out with the indices. So obviously we had Nvidia report yesterday on Wednesday, blockbuster numbers, and everyone's in a tizzy. It was all over the news. It even made my local news in New York. I'm getting hundreds of texts now. Yesterday it was only like 20. Today all of my family around the world started to text me about Nvidia. And yeah, Nvidia's up, but the Dow is down 610 effing points. The Nasdaq is down 114 effing points, or 60.68%, and the S&P is almost down 1%, down 48 points. What the heck is going on? Let's peel the onion, shall we? So we had 530 new highs versus 246 new lows. We had 14% advancing versus 83% declining. 46% of stocks were below its 50-day, and 35% were below its 200. So a little bit of an expansion on the 200-day moving average, stocks below it. And we had a lot more expansion on stocks underneath the 50-day. So that tells me, before I even look at anything, that we lost a lot of stocks to the 50-day moving average, because yesterday was at like what, 31 or 30%? Correct me if I'm wrong, but around there. So we went from 30% below the 50-day to 46% below the 50-day. This is why I watch this every day. It allows you to give to have, take in the complexion of the markets without having to look at thousands of charts and thousands of, news articles, right? Plainly, bearish day. And they're using the Nvidia earnings pop to sell everything else. So let's go take a tour around mega cap land, shall we? It's going to be ugly. So Nvidia right now is up 8.9% at 3:16 p.m. Keep in mind it was up like a lot more than that. It was up like 11% at the peak. Microsoft down 1%, Apple down 1.9%, Google down 1.8%, Meta down 1.26%, Amazon down 1.6%. All of the semiconductor group is red. Tesla down 3.7%, and then everything else is red. So what is green? I'm looking for green. I'm looking at the one-day sector performance. Nothing is green. Okay, let's keep going here then. So very bloody day other than Nvidia. I actually asked Gemini, which uses Nvidia microprocessor or GPUs, to paint Nvidia. That was my prompt. I'm just kidding. I asked it to paint everyone on one side of the boat in an impressionist style. And what a beautiful painting / image created by Gemini. Thank you, Alphabet. I give full credit. But this painting or image of a painting by AI is depicting majority of the passengers of this boat on one side, with it almost tipping over into the sea. This is where Nvidia and the markets are right now. Everybody is in the Mag 7 and the semiconductor index. And Nvidia, I think I read that 40% of all of the S&P 500 and NASDAQ earnings growth, 40% of that growth in earnings is from one company, Nvidia. This is not going to last. Hey, look, it's at like what? Let me check real time on my phone here. So Nvidia right now at 3:18 p.m. is trading at 1,025. Is it going to go to 1,500? Sure, why not? Maybe it'll go to 2,000 split adjusted because they're going to reverse split this 10 for 1. So after like June 10th or starting June 10th, you're going to basically have Nvidia, if it was trading at 1,000, trade at 100. Okay? So all that's doing is it's slicing the one pizza slice into 10 slices. That's all that's happening. So this is an optical illusion that Wall Street loves to do because I would say smaller investors that have less money, like $1,000 to invest, they have trouble buying one share of Nvidia. If you have $1,000 and Nvidia is at 1,500, you can't buy one share of Nvidia, right? So if you're a wealthy investor, it doesn't matter to you. The smart money does not care if Nvidia is at 1,000 or 5,000 or 10,000 a share, because if you buy one share and it goes up 300%, it's the same thing as if you bought $100 stock and it went up 300%. It's the same effing thing. The reason why Wall Street does this is to attract a larger pool of smaller investors so they can fork over more money to buy Nvidia. This usually happens at the end of the bull run, not the beginning, okay? Because Wall Street does not want you in at the beginning of the run. They're the ones buying first. They do this at the end when they're starting to run out of buyers. Everybody owns Nvidia. Everybody owns Apple. And the last people, the last piece of the tip of the land where the rest of the buyers are, the grandmas, grandpas, people that don't invest because they can't, because they're broke, they go after them with these reverse splits. And then to keep wealthy investors in from selling, they raise the dividend if they already have one, or they announce a new dividend if they've never had one before. Then they announce layoffs, right? Like this is just the playbook. And you're going to see this more and more in the stock market. So I did want to give a big shout out to JW, who left me a very great compliment and review on Apple Podcast. I have more ratings now than ever before. If you guys can do me a big favor over the Memorial Day weekend, click on one of the links to either Apple Podcast or Spotify and just give me 5 stars if you enjoy the free or the paid podcast. It greatly helps other community members find the Substack. So let's keep going. What else stuck out today? I mean, I'm having fun with Gemini and creating images. Basically what happened, the summary of the day is that the sheep got sheared. Yesterday, I mean, my gosh, everywhere I turned, it was about Nvidia earnings. And I suspected that this news somehow, some way was going to be used to have a sell-off. Now, Nvidia is not selling off, but everything else is. Right? So it has caught a lot of folks off guard. The PMI inflation data this morning came out very hot. So the presumption is that if inflation stays higher for longer, in continuation of the FOMC minute on Wednesday, they can't cut rates. They can't cut. And if they can't cut, then that's good for the US dollar, right? Because if they cut rates, it's bad for the US dollar because that is signaling they're going to print. But if they're not going to print, the dollar's going to bounce. And if the dollar rises, risk assets fall. And typically, you have gold, precious metals inversely related with the US dollar and currencies in general. So if currencies rise or the US dollar rises, that naturally will pressure precious metals. That's my train.
Stand clear of the closing doors, please.